Welcome back to Fast Market, everyone. Kevin Hinks back here for our cash tag segment. Sean Cruz is with me, and now we'd like to welcome in Mr. Andy Swan. He is the co-founder of LikeFolio.com. Andy, the travel industry and this pent-up demand involved in the travel industry has kept all these stocks in favor and strong. What do you got for us on Airbnb? They come out with earnings after the bell today.
Yeah, travel's pretty strong. We're seeing it, really across the board. When we look at, consumers talking about taking a trip, either internationally or domestically, we see, a really nice surge year over year. Pretty much what was expected, as, things are very different this year than they were last year in terms of people's willingness to travel, especially internationally. Last year was, you were really playing a game of trying to figure out what you would be allowed to do, where you could go, what documents you would need. That's all eased up a little bit. So we're seeing international travel moving up and taking a trip moving up. So there's good tailwind at the back of Airbnb in general. And we see it playing out across Airbnb and some of the major hotel chains as well, where we see consumer demand pretty much 25%, 28% up across the board, with Airbnb slightly outperforming the hotel chains on a year-over-year basis. From a website visit perspective, Airbnb is doing very well. Again, we track this stuff now. We bring it first to you guys on Fast Market, and we see Airbnb's website, which is strongly correlated to revenue, up significantly year over year. And it tells us that Airbnb is going to have a good report. We think, their numbers will come in right in line, or maybe just short of analysts' expectations. The problem that we have, going into this earnings report, is that analysts' expectations are pretty high. They're looking for 25 to 28% revenue growth year over year. That's right where we think things will come in. And given the way that stocks have traded post earnings this season, it makes me think, sometimes there's a sell the news factor to a lot of this. And the first button traders are hitting after a lot of earnings reports is the sell button. So I think that's where the risk is for Airbnb, despite the fact that they have good tailwinds and good numbers. I just think, market environment right now is kind of sell first and ask questions later on earnings. And so we'll see how this plays out tonight. But overall, the company's doing well, making a nice comeback, and Wall Street's already kind of anticipated that.
So, Andy, looking at just the makeup of the Airbnb business, and we talked about Uber yesterday, thinking about the delivery versus the actual mobility segments. But here for Airbnb, there might be the vacationer versus the person who maybe is just trying to get out of somewhere and work from wherever they want because they can. But now with return to office, maybe you're going to get less of that. Is there a sense, and I like to look at the credit card companies, they always talk about travel and how that's impacting activity in their networks. Is there a little bit of any read-through on that maybe shows, sure, return to the office means you're not getting the 28-day stays, but maybe the travel's picking back up, and we've seen evidence of that anecdotally elsewhere? Do you have any read-through on that?
Yeah, I think you're right. I think there is that. It's a little tougher to get away, now that people are back in the office. The one thing I will say in terms of the negativity around Airbnb versus a hotel is pretty significant. It's really come on in the last 3 to 6 months in our data. Consumer happiness for Airbnb has fallen fairly significantly over the last, over this kind of return to travel, and the main reason for that is the fees that are charged. There's a lot of cleaning fees. There can be some, all these type of hidden fees in there, and it almost feels like at some Airbnb locations, you get a laundry list of things to do so that you can keep a decent, renter rating. And you have to wash the dishes and the towels and put everything back exactly how it was. And then on top of that, you're going to pay, a $200 cleaning fee. That is not sitting well with customers. I think that's one thing Airbnb really needs to get in front of. because it is becoming almost meme worthy across the internet. And people are talking about how they would opt for a hotel because at least there, you don't have to wash the towels before you leave.
Andy, I was on Airbnb's site looking to rent a house for a week in a vacation town. The fees were $1,800 for the week. Now think of that's not $200. $200 would sound like a deal, but this company has still got a moat around it. They have 74% market share. They have an asset light business model where they don't own anything. They are just the conduit between the vacationer and the person that owns the house, who basically they funnel all the work in between those two. They don't have to spend a lot of money on R&D or CapEx. This is like a dream business model for a company. They are literally the middleman here, aren't they?
Oh yeah, it's one of the biggest success stories, that we've seen go from idea to execution as a publicly traded company. I think it's one of the best companies in the world. You mentioned their moat, and their moat is really interesting because, like you said, they're simply a middleman, but it is the place that people think of to go. Their moat is their brand. Their moat is that recognition and that marketplace safety that people have when they book with Airbnb, and I think they're doing a good job of defending that. Again, I think this is a fantastic company. I think long term should do very well. I'm a little concerned going into earnings that we may be a little bit ahead of ourselves and unable to reach a really, really high bar.
Yeah, Andy, this company, you're right. They have a lot of things going on, some that we haven't even mentioned yet. I'm going to mention one to Sean. How about this? Interest. When you pay the money, they get interest on it between when you pay and when you show up to the house. And they made $20.2 million on interest. And with interest rates going higher, you think that's going to get better or worse? It's going to get better. Andy Swan, thank you so much for coming on as always and bringing the LikeFolio data to Fast Market. Have a great day, Andy.
You too. Thank you.
All right, Sean.